What's up, investors? Jake here. Currently on my Schwab accounts, I'm looking to make additional long-term investments. I'm sitting on about $22,000 worth of cash, researching various stocks, once again, to make long-term investments. And earlier this week, I did a product review for the new credit card, the Capital One Venture X. This is supposed to be a Tier 1 luxury travel card with a $395 annual fee to compete with the Chase Sapphire Reserve or the Amex Platinum. And all the credit card YouTubers love this card. They're recommending it to their followers. And with credit card launches, just think about the upfront cost to the consumer, the user of the card, versus the short-term benefits that the company gets. So if you're not familiar with the Capital One Venture X, in order to get the sign-up bonus, which is 100,000 Capital One points, you have to put $10,000 worth of spend on your card in the first 6 months. Now, who is immediately benefiting from all of this spending? And it's Capital One. Every time you swipe your card, there's an interchange fee charged to the vendor. Capital One is going to make money. Additionally, everybody signing up for this card has to pay that $395 annual fee the first month. So lots of people are going to be spending a lot of money on these cards, plus the annual fee. And in return, Capital One is giving them Capital One points. What are they worth? Well, about 1 cent per point. It's about a $1,000 value, which is a cost to Capital One. However, it's not an immediate cost. When people accumulate points, they kind of tend to hoard them until they're ready to make a big trip and they've got to book a bunch of hotels or flights. So the immediate cost to Capital One is virtually nothing. They're giving away Capital One points, while in the short term, everybody is going to be using this card and spending on this card. Which got me thinking, well, is Capital One's stock price a good bet in the short term? And we can look at its 5-year performance. It was doing nothing special over 2018, 19, or 20. However, since the pandemic drop, up 266%, that's pretty good. Up 74%, but then I noticed that around May, the stock price got to about 150 and stopped going up. And it's entered this range of consolidation. So newsworthy events got me excited. The technicals actually have me excited too. So let's check out their fundamentals. What is going on with Capital One's share price? So this is macrotrends.net. Let's first look at revenue, and we can see that their revenue has been steadily increasing since 2014. Not bad. Obviously, it dipped during COVID because everybody was staying home. People weren't spending money. However, it's been going back up, so it has been recovering. Let's now check out net income, and this probably is the most impressive thing. They're remaining profitable, but really profitable. I mean, they're more profitable during COVID than they were during not COVID. Explain that one to me. I don't know. They must have cut costs dramatically, or everybody's paying their credit card bills and there's nobody in delinquency and they're not having to chase those people down. But look at their net income the last 5 quarters. Very impressive. Additionally, shares outstanding. This is really important. Shares are decreasing. Capital One is not diluting you. They're buying back stock with company products. Fantastic. Love it. So let's go to price ratios now. And with banks or financial stocks, the ratios aren't going to make the same amount of sense as when looking at tech or consumer stocks. So when we look at their PE, it's only a 5. So banks and financial stocks don't get evaluated the same as, once again, a consumer stock. So when you want to evaluate, well, how is a financial stock doing, people often look at price to book value. So when we look at price to book value of Capital One, it's currently at 1, which is a little high. It's higher than it's been traditionally, but in an overinflated market like we're living in today, seems kind of reasonable. So how can you value or evaluate, how is Capital One doing overall? And a good technique is to compare it against a competitor. So let's look at American Express, and we'll go on macro trends and check out the price ratios for American Express, another financial stock. So their PE is 19. Look at that. So let's do side-by-side comparisons to see if Capital One is undervalued relative to their competitors. And American Express is 19, Capital One is 5. Let's go to price to sales. Currently, Capital One it's high compared to its history, but once again, everything is kind of overinflated. But it's 2.25. Where is American Express for price to sales? We're looking at price to sales. Wow, 3.57. So American Express is greatly overvalued compared to Capital One. We're going back to price to book value. We said that for Capital One, it was a 1. Once again, lower is better, lower is cheaper. And let's now check out American Express's price to book value, all-time high. It's at a 5. So by price to book value, American Express's stock is 5 times more expensive than Capital One. So I'm liking the news with Capital One, I'm liking their fundamentals. Let's now check out their technicals, and let's actually do it in Charles Schwab today. So if we go under Research Stock and Charts, we can type in the ticker symbol of COF, and I want to show you in this video how to look at a stock chart. First thing let's do is let's switch this to be candlesticks, and let's figure out what kind of range we want to look at. Let's see here. So the stock was in a strong uptrend from basically November of last year up until about May this year. And it's kind of moved into this sideways consolidation range. So what we want to do is try to figure out where are there lines of support and where are there lines of resistance. So if we go to this tool here, first one that sticks out, a nice round number. I've mentioned this before on my channel. But there appears to be a line of support at around 150. So in the last 6 months or so, anytime Capital One's share price is pulled back to 150, buyers step in. They say, okay, this is a good price to get back into it. So where is another line of support or line of resistance? And I'm seeing here at around 165. When the stock got to 165 in June, it bounced off. Got there again in July, bounced off. It broke through in August. However, we hit our next line of support, line of resistance around 175. Isn't it kind of humorous how this, when buyers and sellers buy these stocks, they just choose these nice round numbers such as this. So currently it's trading in a range between 150 and 175. My argument is that the fundamentals are good. In the short term, with the launch of this new card and just the general holiday shopping season, I think their earnings are going to be bonkers. And this is another weird thing. Let's add the earnings here, and you can see this little E. Capital One gapped up huge on earnings because they beat earnings per share by 68%. That's pretty good. There was an earnings report here. It was up 64%. Nothing happened with the stock. But then here, once again, earnings per share beats by $1.40, up 26%. And there was a sell-off. There was a huge drop here. So Capital One, once again, their net income, earnings per share has just been monster the last couple quarters. Surprised by 86%, surprised 68, 64, 26. So the next time they're going to be reporting earnings is in January 24th for the fourth quarter. I think the stock is going to pop again at that time. And this is a good time to buy, in my opinion, because we're at the low end of this range. The stock is channeling between 150 and 175. And if we buy it today, we're getting it at 153. Another technical event that is a positive sign for Capital One is if we add the indicator, we can add the simple moving averages line. So the yellow is the 20-day moving average, the gray is the 50-day, and this orange is the 200-day moving averages. Oftentimes, when the share price of a company gets too far away from the 200-day moving average, it'll just start channeling like it does until the 200-day moving average catches up to the share price of the stock. So here's the 200-day moving average, and Capital One is actually down today. As soon as that share price touches the 200-day moving average, buyers will step in, and I think this stock will start moving again. For that reason, if you see what I see and you like what you see, obviously make your own decisions, think for yourself. But if you want to just buy the stock, you can buy the stock. On my channel, I like to be a little extra. And my plan is to buy long calls that will expire in June of next year. So let's just do that together on Schwab. So here is the option chain for Capital One. For expiration dates, I want to go with the June of 2022. Let's hit continue. For strikes for fun, let's add 16. And let's see what is a good strike price to go with. Now, my first instinct is to go for 150, but it looks like there's a lot more volume and open interest on the 160 for some reason. I think it's going up either way, so I think I might go with the strike of 160. Now, what is my break even? How do I make profit on this long call? And you can just add what you're going to pay for it. I'll pay probably the ask price, so $11.40. Add that to the strike. So if Capital One by June 17th in 213 days can get to 171.40, this will be in the money at expiration. Now, I don't see myself actually holding it until June of 2022. I think on earnings in January or potentially in the spring, it will break 175 and go to the next nice round number. Maybe it'll bounce off 190, 185, or possibly even 200. So as soon as that event happens, I'll probably just sell it for my profits once it has intrinsic value and remaining extrinsic value. So because this is where the volume is and all the open interest, let's just go ahead and select this and then figure out how many of these contracts do I want to buy to open. So let's do buy to open, and we'll just go to trade. I've got about $55,000 in my Schwab accounts, and I'm willing to make a 10% position, once again leveraged with long calls, so I'm looking to spend about $5,000. So let's see what quantity 4 at a market order looks like 4,500. I like this trade, guys, so let's up it to 5. This order looks good to me. If I wasn't filming this for you guys, I probably would set a limit order for the mid price and then wait a couple hours for it to fill, but I want to fill for this video, so I'll just go straight to where the sellers are selling because I am buying to open, review order. Okay, we're back in my main accounts, and here we have it. We have long calls on Capital One, quantity 5 with a strike of 160. Cost per share per contract is $11.46. So what can go wrong here? Well, it's currently selling off, and if this 150 line of support doesn't hold, where's the share price of Capital One going to go to? It's probably going to fall to maybe 135 or 130. These are the next lines of supports from the history of the stock chart. I don't think that's going to happen. I'm feeling pretty confident that if it hits this 150, it'll just bounce off and then buyers will step in, it'll go back to 165. Okay guys, if you enjoyed this video, give me a thumbs up so the algorithm knows it's good. If you have any comments or questions, let me know down below. I love hearing from you guys. Till the next video, take care.